Welcome to Stock World, where we break down the latest financial news, market insights, and stock analysis to keep you ahead in the world of investing. Today, we'll be diving into UnitedHealth Group's recent struggles and what it means for long-term investors. UnitedHealth Group has experienced a sharp decline recently, with its stock plummeting by 14.5% in just a single trading day. Over the past year, the stock has lost nearly 48.78% of its value, and in the last month alone, it has dropped around 55%. This is particularly striking when compared to the broader S&P 500, where most companies have seen double-digit gains. It's important to note that UnitedHealth is not a speculative high-growth startup, but a well-established giant generating over $400 billion in annual revenue. From 2014 to 2023, UnitedHealth's earnings per share (EPS) have shown consistent and robust growth, reflecting the company's stable performance over the years. While there was a temporary dip in 2024, largely due to a significant cybersecurity incident, the long-term trend remains impressive. This kind of predictable earnings growth is typically highly valued by investors who prefer stability and consistent returns over uncertainty. However, recent developments have shaken this stability, leading to a steep sell-off. Adding to the current volatility, UnitedHealth recently announced a significant leadership change, replacing its CEO. This sudden decision was coupled with the removal of its 2025 financial guidance, a move that caught many investors off guard. Historically, UnitedHealth has been known for beating earnings expectations, both on the top and bottom lines. However, recent quarters have seen the company miss these targets, further fueling investor concerns. The latest blow came from a Wall Street Journal report, revealing that UnitedHealth is under criminal investigation for possible Medicare fraud related to its Medicare Advantage billing practices. According to the report, this investigation has been ongoing since at least last summer, though it was only recently made public. In response, UnitedHealth quickly released a statement denying any official notification from the Department of Justice about the alleged probe. The company labeled the report as irresponsible and reaffirmed its commitment to the integrity of its Medicare Advantage program. Despite the turmoil, UnitedHealth's financial fundamentals remain strong. The company has a solid history of dividend growth, averaging over 16% compounded annually over the past decade, backed by consistent free cash flow. At current prices, UnitedHealth's starting dividend yield stands at 3.8%, the highest in the company's history. This suggests that despite the recent decline, the stock might still be undervalued if the company can navigate its current challenges. Bank of America recently weighed in on the situation, projecting a potential 10 to 20% drop in UnitedHealth's EPS for 2025. They also adjusted their price target for the stock to $350 per share, which is notably higher than the current trading price of around $263.56. This indicates that while the short-term outlook may be challenging, there could still be significant upside potential if the company can stabilize its operations and restore investor confidence. In the long run, stock prices tend to reflect earnings growth and free cash flow generation. For UnitedHealth, the question is whether the market's current pricing, which seems to assume almost zero growth in free cash flow over the next decade, accurately reflects the company's true potential. If the recent allegations prove unfounded, the stock could present a significant buying opportunity. However, the situation remains highly uncertain. If the fraud allegations are proven true, it could fundamentally alter the company's financial outlook and investor sentiment. For now, UnitedHealth appears to be a high-risk, high-reward proposition, making it a challenging but potentially rewarding investment for those willing to take on the added risk. In summary, UnitedHealth's stock presents a complex picture. It offers an attractive valuation for long-term investors if the company can weather its current challenges. However, until the uncertainty clears, this remains a speculative play with significant downside risk. As always, it's crucial for investors to stay informed and make decisions based on a careful assessment of the risks and potential rewards involved. Thanks for watching my YouTube channel. If you found this analysis helpful, don't forget to like, share, and subscribe for more in-depth market updates. Stay tuned for our next video.